was basically China's sovereign wealth fund. And this was probably in 2004, maybe. And they wanted to basically suck as much information out of GATA's brain as they could about the manipulation. And they wanted advice on the best way to extract physical gold and silver out of the system.
So are they just sitting there saying, all right, as long as you'll sell us, $18 silver, $17
Yes,
gold.
that's exactly what they're saying.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And fortunately, it is that time of week again for Dave Kranzler's Silver and Gold Market Update. And Dave, before we dig in, first I want to show off my new #GotSilver t-shirt. I don't know, yours is in the mail, so we'll get that over to you. And I mean, you're already handsomest gold and silver analyst out there, but you're going to look sharp with the shirt, sir. I can't wait. You're grumbling over there. I see it. You want the yoga pants. Is that what this is about?
No, I'm not doing any more of these podcasts until my shirt comes.
What if we got you the purple yoga pants that my mom got that she liked a lot?
I'll take a hard pass on those.
Okay. Well, I'll bet you'll be coming over to my basement here in no time. Or maybe the Comex will be calling me. We know it wasn't the Comex that called Eric Sprott, but heard a couple weeks ago, Eric Sprott talking about a silver shortage, people calling him looking for 1,000-ounce bars. Last week when you were on, you dug into a bit about how there was a lot of gold standing for delivery on the Comex. So first of all, excuse my manners. How are you today, Dave?
I'm doing okay. Yourself?
I'm doing great. And great call last week. A lot of people have been asking for an update on that. So can you tell us where it stands with that delivery? How many of these contracts are being posted? How many more will be posted? And especially for people who aren't familiar with how that whole process works, if you could explain some of that, I think that would be great.
Who said I'm familiar with the way it works? No, I'm just kidding. Yeah, so I can't remember what the April final delivery number was in terms of number of contracts. I want to say it was like 41,000 contracts and change. But so far for the the June contract, and we're, let's see, 5 business days into the notice period, the delivery notice period, there's 45,000 contracts of June gold that have been delivered.
Yeah.
So I think that's now the new record amount of front month deliveries, or monthly deliveries period on the Comex.
Yeah, and I think the April number, if I recall correctly, I think it was around 30,000.
It was more than that, but anyway,
But we're in new territory.
It's a big number, but to some degree, it's meaningless unless the bars are removed from the Comex, right? I mean, so anyway, just to cap off about the conversation about potential deliveries. So for June, there's about 6.6 thousand contracts left standing. And that number increased yesterday, as of yesterday's trading, by 347 contracts. So just because you're in the delivery period for a Comex contract doesn't mean you can't buy and sell them. So presumably the 347 who additional who were long at the end of the day yesterday, presumably they're buying that contract because they want to take delivery. It's probably a pretty good assumption that there'll be at least 4,000 or 5,000 more contracts delivered, but who knows? It could even be more. It just remains to be seen. So, and by delivery, what all that means is that if you're long a contract and you're in the notice period, the counterparty to that contract, the person who short the contract, will has a certain period of time. If you continue holding that contract and you're waiting for delivery, there's a certain time frame in which the counterparty has to notice you that it intends to deliver, and then there's back office stuff that happens, and then you're issued what's known as a warehouse warrant. And the warehouse warrant is basically a piece of paper. I mean, it's now all digitally accounted for, that that's represents that the bar you're being delivered is, meets Comex standards, blah blah blah, and it's in this vault. So it has your name. There's a bar in a certain vault that has your name on it. That's what a warrant is. So
Also has a lot of other people's names on it too.
it very well could. We don't know, and
Pastrani.
that's the wide open loophole that makes it easy to manipulate gold and silver on the Comex. Is a lot of the gold doesn't ever get removed from the vault. So what I would like to see happen is the 45,000 contracts that were noticed for delivery. So that's, call 400, was that 45,000 contracts? So it'd be 4.5 million ounces of gold. I would like to see, is that right? Is that math right? Yeah. I would like to see those entities actually take their bars out of the Comex and move them to a private depository. But who knows if that'll ever happen? So as long as people who have a warehouse warrant, as long as they leave the gold in the Comex, there's no telling if that bar is really there or not. So, and I know most people probably want to believe that that's conspiracy theory, but it really isn't.
I know people say that sometimes, although I don't know which part of that could be considered conspiracy theory. I
Well,
mean,
because
just look at the
there's
basic
no way to prove
numbers.
whether the bars are there or not, and so you're just making the assumption. But
Yeah.
you know, over the years, especially when the market gets hot like this, we've seen banks, primarily European banks, that have gold investment accounts that supposedly have gold in them. Close those gold accounts when there's reports that gold and silver are getting scarce, and we saw that about 6 weeks ago, 8 weeks ago with ABN Ambro. They closed down their gold investment account, and investors were not entitled or allowed to take their payout in physical gold. They got paid cash. So that's not even a real gold account.
No, it's not. And we'll come back to some of these things that the banks are doing in the gold market. Although I was wondering if you could perhaps give us a similar picture of what you just talked about, but in regards to silver. Or actually, excuse me, one question before that. When would we know whether people are actually withdrawing the gold? Is that at the end of June, or I mean, I understand, and to be clear, what you're saying is that we don't know whether they will or not. But when would we, if they did, when would we find out about that?
Well, I mean, if you really wanted to track it on paper, you could track the registered gold account in the daily Comex warehouse stock report, gold inventory report, and see if the registered account, which is the deliverable gold, see if that declines, on a net basis. I mean, presumably some gold will be moved into the registered account, and if people are moving gold out of the Comex, that account would also decline, or. So again, it's one of these things. It's so opaque. There's no way to know unless someone gets reports on the ground. Hey, there's a lot of trucks backing up, on JP Morgan's Comex vault, and they're taking bars away. I mean, we won't know until we know, and the only way we'll know is if the Comex ever has to declare a force majeure or outright defaults. So,
Yep. And would you, by all means, feel free to decline. I don't want you to share anything confidential here. But I know you've told me that in the past, you actually a couple of years ago did take delivery of a contract. Anything you can share about that?
well, that was more than a couple of years ago. That was, I want to say it was May 2009, I think.
Uh-huh.
It was, and we had some silver contracts in my fund, and we stood for delivery. Counterparty was HSBC, of course, and it took us. We wanted to get delivery of the bars and move them out of the Comex. We weren't leaving our bars in the Comex, and it took us 6 weeks before we were able to get our bars out. And legally, you're supposed to be delivered within 3 days of the end of the delivery month. And if our fund was bigger, we probably would have, filed a lawsuit just to give HSBC a hard time. But we were able to get our bars out of the Comex, like I said, 6 weeks later than it was supposed to happen. And the reason why we stood for delivery of bars on the Comex is the premiums for refined bullion products like Silver Eagles, et cetera, were very high at the time. And we wanted to just source silver at the spot price. So, but that's the last time we did it because, it's just, you take, if you want to stand for delivery on the Comex and actually take delivery of the bars and move them out of the Comex, there's risk there that you might not be able to do that, or it may take a lot longer than you expect it to.
Yeah, certainly. I wasn't there, but I've heard stories anecdotally that when Eric Sprott tried to get physical delivery of his silver, it didn't go all that much more smoothly. Anyway, back to our earlier question. Could you give us a rundown of how the deliveries or when we find out more about deliveries in silver?
Well, the current front month is, there may be deliveries going on now because there's June silver contracts that are still open, and I haven't been tracking silver deliveries, but there's 116,000 July contracts, which is the next front month delivery contract, and I'm assuming that first notice probably isn't until like June 28th or June 29th. You can go to the CME website and look that up, but we won't know anything about the July delivery period until the end of this month.
Okay. Well, that's good.
And normally what happens is, like, there's 116,000 contracts standing. Typically that whittles down to say 11,000 contracts by the first notice period. That's, it's mainly hedge funds, and they're like, what are we going to do with silver? We don't, so they take that contract and they sell it before the notice period, and they'll roll out to the next front month period, which in this case is August.
Okay. Well, that's good to hear.
I'm sorry, not August. It's September. The next front month period is September.
Well, that's good to hear. Some of this action will be before my July option expiration cycle, so we'll see how that goes. Dave, what do you think China and Russia are thinking while they're sitting here watching this charade?
Oh, they know what's going on. They definitely know what's going on. I was involved in gathering some data for a conference call that at the time the board of GATA had with I forget the specific name of it, but it was basically China's sovereign wealth fund, and this was probably in 2004 maybe. And they basically, people who run that fund wanted to have a conference call with the GATA guys, and at the time that included James Turk, and they wanted to basically suck as much information out of GATA's brain as they could about the manipulation, and they wanted advice on the best way to extract physical gold and silver out of the system. So, I think the whole world is aware of what's going on, at least people who follow this sector.
So are they just sitting there saying, all right, as long as you'll sell us, $18 silver, $17 gold.
That's exactly what they're saying.
Well, that makes enough sense. Another theme that we've had happen in the recent weeks, something that I've wondered about before, where my understanding of the way these gold and silver short positions are constructed, you have a bunch of banks generally on the same side. It goes back and forth, picking off the the tech funds. But, you can tell me if you disagree with any of my underlying assumptions here, but essentially that you have a bit of a prisoner's dilemma between the banks or whoever is currently short the metal, where if one of these guys says, geez, Fed's printing unlimited and they got a new meeting coming next week, maybe it's not a good time to be short a lot of gold and silver. Screw this. Let these guys duke it out. And I'm going to head for the exits. And it seems like we're actually seeing that happening now. We had the Bank of Nova Scotia announcement. We had that story last week, the bullion banks pulling back 50 to 75% of their position on the Comex. Are some of these guys running scared now? I get the feeling, I'd wondered about it, and from some of the conversations I have, anecdotal evidence that is happening now. Any thoughts on that?
I mean, again, it's hard to put yourself in the seat of the guys running the metal operations at the big bullion banks, but certainly if you look at it's been an incredible contraction in open interest in Comex gold and silver, and there has to be a reason for that. And I think it's what you said. I think the banks want. I think they always know that they're at risk for getting called on gold and silver via the Comex contracts that they can't deliver. But I mean, the gold open interest, and again, I don't remember what month it peaked. I don't know, January, February, whatever. I'd have to go back and look at the data. But the gold open interest got to as high as 800,000 contracts,
Yep.
or a little bit over 800,000 contracts. And now we're at, we're well under 500,000 contracts. And that's a huge decline in open interest in that short a period. And then silver was, for the longest time, it was, I'm talking about, months and God, probably a couple years. The silver contract open interest was just hung in there over 200,000 contracts for a long time. And now all of a sudden you're looking, it's sorry, I closed the browser. I should have left it open. I didn't know you were going to ask me about this, but
I appreciate the versatility. Look at you doing an audible mid-interview. Folks at home, now what I'm doing here is I'm buying a little time for Dave. It's just some of my interviewing tricks I picked up. But look at him analyzing the defense, pulling up the screen.
So anyway, the silver open interest is now, it's 168,000, and it was down to like 130,000 and change at one point in the last, I want to say 2 or 3 or 4 weeks, whatever. So in the context of silver, that was just a massive decline in open interest. And I mean, to me, the only thing it can indicate is that the banks stopped printing contracts that they were shorting as the price was going higher, right? So that's one of the ways they cap the price on the Comex. Hedge funds rush in to buy gold and silver contracts, and the banks just keep cranking out new contracts and feeding it to the buyers instead of the way a real market works, where if someone comes in and wants to buy a security, right, you got to tell your sales force, get on the phone and find some sellers, right? You see what I'm saying? So let's put it this way. If you think about how this Ponzi scheme works, if the CFTC, and this will never happen, put in a rule that said the amount of open interest in gold and silver contracts can only be up to 120% of the underlying amount of gold and silver in the Comex vaults, then you would have a relatively fixed amount of contracts. And when buyers came in, instead of, we'll just go print more contracts and let the open interest escalate because they'll never stand for delivery. And then even if they do, they'll leave the metal in the vault. So what do we care? We don't even have to have the gold in there to back these contracts. So instead of that, which basically caps the price as more buyers come in, right? Just crank out more paper and feed the ducks. If you had a fixed amount of contracts, the price would go up a lot more quickly when the buyers come in, because then you'd have to go and find sellers, right? And then you'd find a true market clearing price. But that's not how the Comex operates, and it's a giant Ponzi scheme, and people who think that it's representative of the gold market are incredibly ignorant or unaware of the facts about, what's really going on there.
Or you could also say,
or they just don't care.
Or maybe they just haven't yet, but really be well served to listen to Dave Kranzler's weekly silver and gold update. Good reason for folks, if you have some friends that don't quite get this, go ahead and hit the share button right now. And where's that, Dave? In the right down below there. Because I know a lot of people don't get this stuff. That's a big part of the reason why I do the show, because I thought it was important for people to know. And while some people call it conspiracy theory, all right, it doesn't really bother me anymore. I've heard it enough times, but it's interesting because this actually isn't new. I was just thinking as you were talking, I'm like, well, I guess it goes back to the London gold pool, although it even goes back earlier when they stole the gold in 1933. But again, and back at the London gold pool, basically you had the same situation that's happening now unraveled then. But rather than go to free market, it was a couple of years. Then we have the futures contracts and, just an extension of this scheme. But for anyone who's, I know people are frustrated, it hasn't moved much in the last 9 years, but it did go from $35 50 years ago to now $1,700, which I would say is, I think Dave, you would agree, is pretty far below any sort of real value now. Although, Dave, I hope you're getting excited because we're breaking a scoop before we wrap up today. This is a scoop. I don't think any other YouTube channel, any other financial media outlet has this. You know how we have a Fed meeting next week, right?
Yeah.
I figured it all out. I know how all of it. I figured it all out. I was sitting in the hot tub last night. It came to me. The Fed is going to start buying shares of Tesla, and the government is, instead of $1,200 checks, they're just going to start giving Teslas to everyone, and the Fed will print money to pay for that, and that's how Jerome Powell and the gang are going to fix the financial system. The funny or scary part is that while I'm joking, if there's anyone from the Fed watching it, they might be sitting there like, oh, that's a good idea. What do you think is going to happen next week, Dave? Any expectations from the latest theatrical, mythical unicorn Fed circus press conference?
I don't really pay close attention to what goes on at those meetings anymore. It's a three-ring circus. It's carefully orchestrated for presentation to the public. It's just all propaganda. So I had no idea. They're not going to lower rates because they're not going to take the official rate negative, in my opinion. So they're not going to lower rates. Maybe they'll roll out some more money printing programs. Who knows? It's just like, I don't even, other than, how the markets respond before and after the meeting, that's all I really watch, and then I look for a summary of what the updated policy statement says.
So does that mean that you're not making your fund's investment decisions by analyzing each brilliant, insightful word that Jerome Powell shares with us?
No, but what I will say, one of the silliest, most idiotic things I've ever seen is, and I don't know if he still does it, but on Steve Leisman on CNBC would take the press release with the policy statement, and he would sit there and go word for word and identify which words were removed or added to the statement. Talk about a complete useless waste of time. And he'd have like sweat pouring off his bald head, and it's got to be one of the dumbest things I've ever seen.
I hear you, Dave. Although, I've read Power of Positive Thinking and other self improvement things that kind of freak you out a little bit. But I will find the positive in this situation as well, because fortunately, rather than having to watch Steve Leisman sweat through it or Jerome Powell lie through another press conference, fortunately, you've been kind enough to create a website where if anyone wants to know what's going to happen a week before the Fed meeting, on investmentresearchdynamics.com. You can find that out. And here we talk about the bull move in gold, silver, and mining stocks just getting started. I see you had an interview on mining stock education there, which I will get into my queue. I did read my mining stock journal last week, Dave, just so you know. So
Very good. I hope you bought some treasury metals.
I actually have a call with them later today, and folks.
Fantastic deal that they just announced yesterday. That's a really cheap stock.
And you can find out more about that full write-up in the Mining Stock Journal. So, Mr. Kranzler, I thank you again for joining me. And folks at home, we have a special closing to today's episode. I've gotten a lot of comments on our introductory theme song. Some people like it a lot. Some people are not big fans, and that's okay. Dave, you actually know what it's from because I've sent you a copy of the CD. I actually decided to write this into an album back in 2011 where it's kind of like mixing Pink Floyd's The Wall with Atlas Shrugged, and if you get like a jam band like String Cheese Incident to play it. So folks, if anyone is wondering where that song came from, we had a reader write in and request a full airing of it. So here you go and enjoy.
Was free.